Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on our podcast, we have George Christopoulos. George has a rich history in the mortgage industry. He has worked with one of the big six banks as well as mortgage brokerages. He's currently the principal broker at Dominion Lending Center's Mortgage Watch. Welcome to the podcast, George.
Good morning. How are you today?
Good. Pleasure having you on. You know what? Before we got you on the podcast, I went through your LinkedIn profile. Safe to say you've spent a good amount of your career within the mortgage industry. So why don't you just start off with, how did you get into the mortgage industry? What pulled you in? Was it something that you knew that you were going to get into? Was it something that you fell into? How did you get into the industry?
I sort of fell into it. It's actually a second career for me. Like every Greek boy, I was attracted to the service industry and the family business. But prior to that, and I'm aging myself here, going back into the late 80s, early 90s, as a young man, I was flipping homes and heavily involved in real estate, and actually had my real estate license at that point. And had to leave the business for a while to focus on the family business. But then the business attracted me again, and I fell into the mortgage business by accident. A very close friend of the family was a senior VP at one of the at what is now a bank, Equitable Trust at that time. Mm-hmm. And just over dinner, we were talking, and my background was real estate. I had a bit of an accounting background, and she says, come by for a coffee and let's have a discussion. And a week later, I found myself in the mortgage business, and it excited me. This is going back 20 years now, yeah. And it excited me seeing the behind the scenes of the business. I found it extremely interesting, and for me, it provided the connection to real estate without trading in real estate, which real estate agents have my respect. That what they do is, they have this impression of being on TV and leading these glamorous lifestyles. They work very hard to do what they do, and this enabled me to interact with them, and it was almost like I don't know if anyone remembers the old Reese's peanut butter commercials where the chocolate meets the peanut butter, and I found the fit very, very comfortable, and I found it very exciting getting involved in the business.
So from Equitable, then you decided to at least, was it join a mortgage brokerage, or did you start your mortgage brokerage right off the bat?
I took I'm a methodical type guy, so I took the long route. Working at Equitable, now Equitable at that time was a privately run company, so it enabled me to learn risk and lending right down to the key elements.
Yeah.
How is the decision made? Why is the decision made? What we call the 4 or 5 C's of credit, determining the client's worthiness for a mortgage. Too often these days, people, it's the assumption that they're entitled to someone. They're entitled to someone to lend them $1 million. It's not that simple. There's a whole process to it. What I found with Equitable is that this is what we call the secondary marketplace. This bank, companies like this exist. They typically support clients who have poor credit, have limited credit, don't fully disclose their income for they work in a cash business, for example, and stuff that the bank doesn't really isn't really interested in. So it was basically what do you want, grassroots lending, just coming out of learning at the very basics and growing from there. I wanted more, and then I ended up networking through my business contacts in terms of how to connect with business. I established a relationship with Scotiabank at that time. Actually, Canada Trust. I was doing business with both those companies, looking after their clients that they couldn't handle, and I needed more, and I decided to try the mainstream banks. So I ended up working for Scotiabank as one of their mobile representatives, and spent a couple of years there, and then about 2 years after that, transitioned over to TD Bank and spent 8 years at TD Bank, again on the road as one of their mortgage representatives. That was a great learning curve because it enabled me to understand the banking system from the inside. So from one end of it, I was able to learn risk and how lending is actually, the lending decision is made. And then in the mainstream banking, it's the corporate level of it and the understanding on how process takes over, and working within that mechanism. So, spent many years. Sorry, go ahead.
No, I just had a quick question now, because I look at because being a real estate lawyer, we're kind of in this industry. We're not exactly where you are, but we're kind of outside of it. We help people close. But from what I see, and you're in the perfect position to kind of shed some light, for me at least, with this and our listeners. When you're at a top 6 bank like Scotia, TD, RBC, wherever it is, like you said, there's a lot of processes and everything is process based, and I feel like they're also catering to a certain type of client. These clients have really nice credit. Everything is reported, and in a lot of ways they are, I would say, the working middle class and beyond, above in Canada, which is good, but the lot part of the economy is kind of driven through small businesses. It's driven through people who are running any sort of business that where the money's kind of moving. I feel like understanding that is where probably Equitable Bank was probably better at. So for me, my perspective, and correct me if I'm wrong, would it be safe to say that when you're working in a place like Equitable Bank, you do really see how the economy is working more than just is this credit score checking out and can we push this along? Is that right, or would I be wrong in saying that? Quick 10-second break. Are you finding this podcast useful? Do you want access to more resources just like this podcast? Sign up to one of our online workshops or our mailing list, and we'll send all the information you need right to your inbox. Good advice is hard to come by, especially in a market like today's. Sign up by visiting treadstonelaw.ca/MAS offer, or click on the link below. Enjoy the rest of the podcast.
To a degree, because to your point of, I think the terminology used was sort of middle class or middle entry and up, I think it was. What we see at the Equitable Bank level, and going back to when I started, when I was attracted to the business, it pulled back a layer of the things that are unseen in the economy and business actually works. I never knew it existed, and I've been a small business person for years. I was involved in real estate. I never knew this existed, but behind the scenes and see the mechanics of it, understanding how small business works. And that is a huge part of our economy.
Yeah.
And to your point is these companies, and just so you know, this Equitable Bank, and there are many other companies similar to them, they're on the TSX now. There are many companies out there that do a tremendous amount of business out there. And everyone seems to think that the banks, they build these wonderful branches with luxurious settings and all that, and walk. They think that they're your best friends. They have a mandate, and what type of client they can service, and that's dictated by the Bank of Canada. The banks are heavily regulated. They can't just do whatever they want. And these other companies, and what we refer to as alternate lending or B lending, with the bank's B customer, these other customers called B. There's a huge amount of business out there at this level. You'd be surprised who does business with these people. It's not just Bruce Credit. It's people that, again, run a business that their paperwork doesn't satisfy the bank's requirement.
Yeah.
And then they go over. The whole overview on this is business gets done, and too often focus on an interest rate and like to brag about it versus just moving forward and doing business.
I mean, sorry. Go ahead.
Please go ahead.
No, I was just gonna say, because and I didn't mean to cut you off. I apologize for that. But to what you were saying, at the end of the day, people glorify like the lowest interest rate. But if you're self-employed, for example, it almost becomes a decision: do I show more income and pay the CRA an extra 30%, and then I could say I earn this much, and maybe I get like half a percentage or whatever less, or do I go to a bank like Equitable Bank or anybody else? We're advertising for Equitable, but anybody in that space, right? And pay a little bit more, but I don't have to declare as much income. And there's nothing wrong with declaring or not declaring income. I'm not saying to do anything illegal. More so just it's up to you and your accountant how you're going to position your finances, right?
Exactly. Here is, and over the years, I've tried to simplify it and come up with analogies for people to help them to get some clarity into what they want. And the simplest way I can put it is, would you rather pay an extra $20,000 in income tax a year to save $5,000 in interest?
Yeah.
Really simple.
Yeah.
And usually when you put it to people in that manner, the little light goes on, and then they understand what you're talking about.
Yeah.
Okay. Now, just to be clear, the banks do have programs for people that are self-employed. They have a certain box that needs to be filled in with the correct paperwork. And they'll work with you. If you're incorporated, they'll look at your retained earnings. If you're self-employed, not incorporated, we can gross up the income a little bit. But the reality is, for businesses that are set up that way, grossing up your income by 15 or 20% is not going to be the solution, because you're operating at a whole different level at that point. And for the most part, if you're self-employed too, you'll have some sort of interest rate deduction on your income tax. You're running a home office also. So there's little offsets here and there. But the key one is this: why pay double or triple in income tax to save a little bit of money in interest?
Yeah.
It makes sense. And let me say this: the amount of paperwork that the banks required is enormous compared to the paperwork that these alternate lenders will require for your approval. And so there's another point.
Yeah, and to that point where it's like, for me, if you're running a business, what do you want to spend time doing? Do you want to spend time collecting enough paperwork so you can, again, save a few points off of your interest payments? Or do you want to just get it done and then focus on where you're making money, which is your business, which is your top line?
Correct. And don't get me wrong. If, as a role of a broker, once we interview the client and establish how they're set up and what they can provide us in terms of paperwork, if we can move that to a bank, absolutely. That's where our goal is. And that's why you work with a broker also. A little self-promotion here for brokers is that we're independent. We don't represent one company. And we don't represent that company's view or that company's policy. And while all companies are essentially very, very similar, they all have subtleties that distinguish between why you would choose this company over the other company, completely separate from the interest rate. So there are distinctions on why we recommend one company over another.
And to that effect, whenever somebody, for small businesses, I always recommend, for small business owners, I always recommend brokers because, I mean, brokers have, I recommend it across the board. And the reason for that is you guys have several different financial products. Right now with the regulatory environment, one bank cannot do everything. They even if they wanted to, they can't. If they could, RBC TD would be in everything, but they can't. So there's several, and there's dozens of institutions offering different financial products, and it's like if you go to like a TD, and they only have a shoe size 9 and an 11, right? And you're a shoe size 10. They're going to say, well, you know what, we don't have 10, but you'll fit in an 11. Is it perfect for you? Probably not, right? But it'll fit. Whereas with the broker, you can get to that 10, and then when you're growing, if you are growing, you move to the shoe size 11, 12, and forward. And it's like even with, I feel like just regular Canadians, if you're not a business owner, stuff happens in life, you know? Like you need somebody who you can give a call to and be like, hey, listen, like, you know what? I want to buy an investment property maybe, perhaps. Or my kid's going off to college. I need to get a credit line. How the heck do I do that, right? And all of these kind of decisions, I don't think the banks are having meaningful conversations. Correct me if I'm wrong, and I'm not anti-bank. But they're not. You can't have meaningful conversations, and I can't come and sit down and say, you know what, this is my kind of situation. This is where I want to go. How can I get there?
Right, and you know, so first off, you know, I'll address that in just a moment. But just so you know, I'd like to put out there that, you know, we practice what we preach. As an independent, we're an independent franchise of Dominion Lending Centers. We were renting office space in the beaches for many years. Our lease came up, and we decided that renting versus owning was completely different, much better to own. So we found a small property here in East York. My office is comprised of 4 business partners that we run and operate the office, and we have other agents that work for us. And what when we bought the building, we had a discussion. We thought, okay, what do we want to do here? Where do we want to get our financing? So we're talking 4 brokers that are all experienced, been doing this for many years. Our situation is we all have 4 holding companies, and then we own the building under another holding company. So path of least resistance, we went to Equitable Bank. It just happened to be Equitable Bank, but we could have used any lender in that space. And we did that because we wanted the shortest processing to accomplish what we needed. We did that. We acquired the property, closed on time, and on renewal, we looked around and thought, well, you know, we can probably improve on this. We've got more time now, and we ended up moving to a big bank at that point under a specialty program that they had. So, Equitable to close on our property at time took when we purchased it took a month to 2 months. The refinance to go to a major bank took 6 months. The amount of paperwork that was required was enormous. And again, path of least resistance versus do you want to go down that, you want to call it a wormhole? I don't know, right? And provide everything at the length of time. So that's why, you know, again, we do practice what we preach, not just, you know, point clients in other directions. To your point about everything else is, yes, we can advise the clients, and that comes with experience too. It's hard because so many people have been attracted to the brokerage market to become brokers because unfortunately the bar is actually pretty low to become a mortgage broker in terms of licensing and requirements. So finding that right person is very, very important. The same thing applies at the banks. Banks have quite a few experienced people that are what are called their mobile mortgage reps, but they have a lot of inexperienced people too. I think the weakest link in all that is walking into your branch and asking for advice. These people may not even own a home. They have no experience in real estate. How is ownership transferred from one person to the other? What are the implications? Family law. We know a little bit of everything, and oftentimes we not just provide a product where we provide the clients business solutions, whether it's through us or if we can't help them, then we would further and say, look, I think this might be the better option for you. You should explore that. So in essence, we operate as almost independent financial advisors and direct the clients to where they should be going. If we can help them, all the best. If not, then we advise that also.
Yeah, and for most Canadians, safe to say, their biggest asset is their house, and it's just important. This is why I drive the sentiment that you just kind of articulated. I drive that home in that, like, even if you get the most experienced guy at the bank, again, I don't hate banks. Banks are great. I love banks. They do a lot of business. We work with the banks all the time. So I'm not gonna say anything that I'm not telling anyone not to go to the banks, but if you go to any big bank or any bank for that matter, even the most experienced guy is going to be the most experienced with that bank. They're not going to know how to move you along and move you from one place to the other. And dare I say the same thing with mortgage brokers, because I don't think every mortgage broker is made alike. And I'll say that not only just there's experience, there's also just relationships with banks. I feel like when when somebody comes to you, for example, I'm not just coming to you for a mortgage. I'm trying to capitalize on the relationships that you've built over your career with the banks that you've dealt with, right? And not the same. Every mortgage broker is not going to have the same relationships. You're not going to be able to call up your representative at whichever bank and say, "Hey, listen, I got this file. Can you push it through?" You know what I mean? And see what do I need, this and that. So there, you got more insight that I can, stepping into a branch or even sometimes talking to a mortgage specialist, because you could sometimes go straight to not straight to the underwriter, but pretty close to the underwriter as to what anybody needs to get this deal done.
It's a great point, and I don't dwell or promote volumes and how much business people do, but that's what drives it.
Yeah.
And so basically, it's like anyone. If you pick up the phone, will that call be answered? Will that call be returned?
Yeah.
And that's your broker calling inside to the bank, trying to get some information that is valuable that they can organize and package your file.
Yeah.
To that point, the underwriters at banks cannot steer you and advise you how to put your file together.
Yeah.
That's conflict of interest on their point.
Yeah.
Okay. It compromises them. But you can also reach out and say, well, I've got this, and this. What would you think of this? And being able to reach out to someone and have that conversation is very important. If you're someone that is a part-timer, and I'm anti-part-timers in real estate and mortgage. You're either in or you're out.
Yep.
I don't think there's any part-time lawyers.
Some try to be, but it's not I don't recommend
it. It may be, but how dangerous would that be?
Yeah,
right? So they're not going to return the call. So yes, relationship is very, very important. And sometimes, based on your volumes, a bank may be willing to approve something that they wouldn't do that for a one-off for somebody else, right? So, to your point, very, very important to have good relationships.
No, I mean, and not even just, you just touched on something so important right now that, I mean, like, it's something that I deal with every day. The fact that you're the one who is presenting the file or helping the client present the file to the bank, right? And that is something that's incredibly important. That doesn't mean that anybody's committing fraud or anything, but there are certain things that need to be presented in a way to make you look your Sunday best. You're just going in, you're suited up, you're making sure everything is in line. Because I have clients coming in, and most people don't realize this, and I have to explain this to them before they come in. With most banks, the law firm that they retain for all their clients, we're not only representing the borrowers, we also represent the lender. So I can't unhear anything that you say to me, right? And so if you come to me and you say, hey, you know what, I'm going to probably rent out the basement. Now, you might be just talking. And a lot of times clients are just, spitballing, maybe I could do this, maybe I could do that. But the loan says, listen, you can't rent anything out. I can't unhear that, right? So somebody does need to be, sometimes people do need to be coached in that, are you really renting somebody out, right? Within the next 5 years, that the term of this loan, right, 3 years, whatever it is. And they'll sit down and be like, probably not. Okay, so then there's no need to talk about it, right? Because then you're put in a different bracket.
Yeah, and that's part of what we do also. And again, it's to your point of packaging and versus fraud. I mean, there's a clear line out there, and unfortunately, clients get drawn into, sometimes they get drawn into these, I'm going to say maybe some shady people out there that will get anything done for you. What they don't realize is that if you go down that path, you are equally responsible.
Yeah.
So if you knowingly provide if you knowingly agree to accept someone providing false information about you to a major bank, you are now part of that.
Yeah.
And that's what they fail to see. What we do is we have a little bit we have more flexibility compared to what you have. So we can look at it and say, well, if you were to rent out the basement, what would that look like? And what would happen today, or what would it look like if you did that 3 months from now? And we do this, again, from experience. It's not fraud. It's just something what we call packaging and advising clients. And the reason we do this is that life changes dramatically. And there are some people that will map this out, but there are other people that they buy, they move in, and you know what? 3 months later, that property does not meet their needs anymore.
Yeah.
Now what?
Yeah.
And it could be because of a job change. It could be a transfer. It could be a family issue, illness, a multitude of things. Life happens, is what I tell my clients. And this is why we have these discussions. In your case, again, we also advise the clients what to say and what not to say. Again, not to compromise anyone, but we know the standard that the lawyers have to work with. Sometimes too much information to anybody is not the best thing, because talking off your head, you could be talking what you think off the record, but you're on the record. Yeah. And there are so many variations to life that most of my, sorry, I'm bouncing around a bit here, but so many of my conversations this year are hypothetical. What if and what if?
Yeah.
Well, what if when you're talking to a lawyer is, I heard that now, right? I can't unhear it, right? So we act as advisors and try to get these things organized and sorted out.
Yeah, and that's why, like even the brokers that are working with us, I mean, we tell them straightforward, coach your clients. Not fraud. Let them know what their intentions are, what they're really doing, and they're not coming into the office just to talk about their dreams and ambitions and all of that. That's great. There's a time and place for it, but it's not when you're signing the loan documents, right? That is for what your intentions were, what you were told, and that's it. And we move on. Right.
And unfortunately, because of our industry, what happens, and as I said, there's so many people out there doing this type of work right now that their motivation sometimes makes, causes them to not advise the client entirely. And it's so critical right now. We get so many calls from people who say, well, I wasn't told this and I wasn't told that. And unfortunately, things don't go away. Yeah. They come up later and bite you. Yeah. So you need to understand, the whole concept. I got to say, first off, just put this out there. Buying a home is very serious business. And people don't take it that
They don't.
seriously. It's not something that you can do on your mobile app. And I see these ads on TV and, get pre-approved in 60 seconds. I'm sorry. If you're borrowing this much money and you're committing to this is a life-altering decision. You deserve more than 60 seconds.
Yeah. Yep.
And you can't live on the phone and get this stuff.
And speaking to the 60 seconds, though, the 60 seconds, I don't know. I don't know if it's a pre-approval. They just say pre-authorization, whatever it is. It's not as straightforward again as like they make it out to be. It's not something that the bank's saying, hey, listen, I'm going to give you this much money in 60 seconds, right? Most banks will look at approve you after you've got the agreement of purchase and sale in, and then they'll approve everything. And so it kind of gets difficult whether you should be, how much can you afford? Where can you go? And this pre-authorization or whatever 60-second will give you a dream. They'll pump it up as high as they can. Yeah, you can borrow $1 million, $2 million, right? And then when you go in and you make that offer, you realize, wait, like there was all these conditions that I didn't know about, and I'm really qualifying for much less, but I'm already in an agreement, which is why I always say, forget about those apps, okay? Call a real life person. We don't need to WhatsApp anyone. Call a real life person. Even if it's a 5-minute conversation, get that relationship going, especially with the broker, and make sure that it's the beginning of something that's going to kind of go through the rest of your life. So next time you need a credit line, next time you need an investment property, next you're getting into a second house, you're working with the same person.
Right, and there's two stages to that. To your point about the pre-approval, the key word is pre. PRE, it's right in front of that. and what you get there is that you'll get we can capture an interest rate for you. But typically at the banks, and even when we do pre-approvals, if you read the fine print, which very few people actually do, you'll see that it's conditioned on everything. You may have told them you make this much money. Have you provided them a pay stub? Has that person dug deeper into how you're employed? Is it salary? Is it hourly? Is it contract? All these things have a bearing on whether the bank will approve you. So the pre-approval itself is basically just an estimate on what you can afford.
Yeah.
The property, and I always say that a full mortgage approval is based on 4 things: your income, your credit history, the source of your down payment, which is also very important, and the property itself. Well, we can deal with 3 out of 4 in advance. The property itself has a bearing on the approval based on if it's a condo, the condo fee amount, the property taxes, the legality of the property. So oftentimes people take these pre-approvals and they go out and then they come up with some wild property, who knows where, that won't fit the bank's profile in terms of appraisals. And the bank says, we'll approve you, but not this property.
Yeah.
Now, part 2 of all this is the crazy real estate market. So you're going out there thinking that you've got all this money to work with, and you've got to think of it as almost like a pre-approved credit card for $800,000 or $900,000, and you buy a property that no one will lend on. And here's where it gets really shady and sketchy: is that unfortunately in today's market, you've bought firm.
Yeah.
You've got conditions in there. You've got, and I know I'm going to get shot for saying this, but I think buying a home, we have the least consumer protection of anything. You've got more protection buying a fridge than you have buying a property, unfortunately. So now the client is empowered, thinking they've got all this money to spend, and they go out there and they find out that they can't get approved. And I've seen this over the years, and it's sad when it happens. You're going into an extremely competitive situation, and oftentimes, we've had clients call me and say, "Can I go firm?" And I said, "Just so you understand, you're walking out on a limb a little bit here, because no one can provide you a firm approval until we have the offer."
Yeah.
And they need to understand that process versus just diving in head first and figuring it after that.
And we saw this issue arise because a lot of people were moving out of the city. So now when you're moving out of the city, you're buying houses with septic tanks and all that stuff, and the banks may not be valuing it the same way you are. It's because those properties sometimes the way they're appraised are a little bit different. The bank's risk profile is very different, and that's one of the many things, right? And I completely agree. But changing gears to what you just kind of talked about,
Sure.
Where and this is a crystal ball question, but the interest rates, I mean, are scaring everybody. Record amount of Canadians took out variable interest rates when everything was tanking. Do you think that we could see 5, 6, 7% interest rates this year or next year by the Bank of Canada?
Okay, so there's two interest rates there.
Yeah.
One is the variable rate, and the other one is the fixed rates.
Yep.
Okay, the fixed rates have doubled since the fall of 2021. I've never seen it move that quickly in all my time. And just so you know, and again, dating myself, when I bought my first house, I paid 12% interest. I renewed 3 years later at 9%, and I thought it was a financial genius.
Yeah.
You know, so the expectation of someone taking that 25 years on their amortization and having the interest rate in the low 2s or under 2% as a fixed rate is not achievable. That is completely unheard of. Now, within that, we've been qualifying people over the past 5-6 years as under what we call the Bank of Canada rate. So even though your fixed rate might have been 2%, we were qualifying people at 5.25%. So the Bank of Canada had built in a buffer there to allow for higher interest rates and coming back into the norm. What the norm will be, we don't know. What we're seeing right now is a spike in fixed interest rates due to the inflation, due to the war in the Ukraine, and when things are unsettled, what we always find is an overreaction. Too far to the left, too far to the right in anything.
Yeah.
Even last night, I was reading a couple of articles from economists from the big banks, and they seem to think that we're spiking right now in the fixed rate marketplace, and that rates may potentially drop a little bit again in a 2 to 3 year time. Now, within that, Canadians always think in a 5-year. Our world is the Canadian consumer always operates in a 5-year cycle. They always want a 5-year mortgage. Other parts of the world in the States, they have 15 and 30-year mortgages, which are it's a different animal. But here the comfort level is that 5-year. Once you're in a fixed rate mortgage, you're in. Nothing's going to change for the next 5 years. You get peace of mind, your payments set, but you also work within the limitations of that. If you buy and sell, how does that fixed rate move from one property to the other? If the rates drop again, what options do you have to break that mortgage and then renegotiate? Again, it seems like we're spiking right now. The media never reports this because by the time they get wind of this, it's already happened 2 months ago. Now, people watch the media, and what they keep seeing is the variable with the prime rate. The prime rate is what we call the overnight rate. That's established by the Bank of Canada. The fixed rates are established by different markets, equity markets that determine the price of short-term and long-term fixed rates and guaranteed rates. So the variable rate right now, in my opinion, is still the best rate to go. And too often we have this discussion, but all the clients hear is the difference in the rate between fixed and variable. Okay, and they make a decision on that. I had a client call me yesterday in complete panic mode because the rates have gone up. She had a variable rate that was recommended to her, and she wanted to lock in. Past client, not one of my clients, was referred by one of my past clients. So she had the option of locking in at 4.4, and her variable rate is at 2.05. And it's like, yes, it's gone up, but why would you want to more than double your interest just to lock in? Even if the variable rate goes up another, right, you're so far ahead, right? And putting numbers to it, it was about a $700,000 mortgage, and I said, so what you're telling me is that you are willing to pay an extra $14,000 a year for that security. And she said, well, when you put it that way, that doesn't make sense. Well, of course not. So when we talk about variable rate, I say to my clients, there's no absolute right or wrong. The decision is made on your your stress level and how much you can kick on. And if you rest your head at the end of the night on your pillow and you're worried about your mortgage, you took the wrong mortgage.
Mm-hmm.
So decision based on that. Prime is more than likely going to go up again. We're now at 3.2. Even if it goes up another half point or a point, you're still cheaper than what the fixed rates are. And the big factor here is that you have the flexibility of not having a fixed rate. And what I mean by that is, if you were to sell that property, let's say you just decided you don't want to own real estate anymore, you're going to go to rent or whatever comes, your exit from that mortgage is roughly 1/3 the cost of a fixed rate mortgage.
Yeah.
And when we're talking $500,000, $600,000, $700,000, $900,000 mortgages, that penalty calculation can be huge.
Yeah.
So variable rate mortgage is always 3 months interest penalty versus a long drawn out calculation for the fixed rates, which is substantially higher. Also with the variable rate, it allows you to lock in should the rates come down again. So if the rates come down again in 2 years, currently you're still cheaper than the fixed rate. And if you do want to lock in and the rates have adjusted 2 years from now, you can lock in at that time. Mm-hmm. It's that flexibility. That's why more and more brokers and most brokers, always recommend variable rate mortgage for clients.
So would you recommend people, I guess you're saying stay fixed or stay variable until we've kind of the variables have hit the fix and then lock it in?
No, I'm saying stay variable and just stay with it.
So even if it goes higher than the fixed rate?
It will. Right now, it's already gone up. Well, the fixed rates are pushing 5% now.
Yeah. Okay.
So you've got, even with today's discount, if you walk into a bank, you're probably going to get a rate of maybe 2.7 or 2.8, somewhere in there, depending. And you need to be wary of some of the advertisements you see on the internet. Those mortgages are not recommended because they come with a lot of extreme penalties built into them and lack of flexibility. Mm-hmm. These are no frills type mortgages. Yeah. And what I'm saying is that in any mortgage, the more flexibility you have is well worth it compared to even saving $20 a month. It does not make sense.
I mean, to your point, and I say exactly what you said. You kind of quoted earlier in the podcast. I always tell anybody asking me for advice, life happens. You need to get more flexibility because, I mean, there's a time where HSBC was offering 0.99 on a fixed, right? But if you broke that, right, the amount, we've seen penalties cross because lawyers actually request a discharge. We've seen 30, 40, 50,000, very commonly. Yeah. And some of them go as high as 100,000. I'm like, what the heck? Was this worth the mortgage, the money you saved?
Well, in our industry, we chuckle between ourselves as in mortgage people, is that people have no reservations in offering $200,000 to $300,000 more than the asking price of a house. Then they try to save $12 a month on the mortgage. It's insanity. And the catchphrase that we use is, it's not what the mortgage costs you on the way in, mm-hmm. it's what the mortgage costs you on the way out. Yeah. Because I'm a shareholder, I've got bank stock, they make a fortune off penalties. Mm-hmm. And you see it every day as a lawyer when they come across your desk. Penalties are there. No one ever wants to discuss penalties or consider them because they just haven't had the experience, right? Especially if you're a first-time buyer, you've never, what's a penalty? How does that work, right? But this is part of our job to explain what are the ramifications of what you're signing and what will it look like in 2, 3, 4, 5 years from now. Yeah. And that's another reason with the variable rate. Going back to what you said about, should you be locking in or not locking in? I couldn't tell you what's going to happen in the world, markets and happen, but what we're seeing right now is actually some pushback on the Bank of Canada, the hikes. 3 months ago, it was like, we're going to get this hike, and this hike. Now there's a little bit of waffling because we're seeing that the economy is not as strong. We've got huge inflation everywhere, and hiking the interest rates even more is going to cause even more inflation. So we may, they're forecasting another 0.5 hike in the variable rate.
Mm-hmm.
How much higher than that they'll go will be determined, because that rate impacts all small business.
Yeah.
And that's what, if they're borrowing money, that's what it impacts. And you know what? If the bank decides to, the government decides to sort of, hate to say it, blow everything up and start fresh again by taking the rates through the roof. And again, I'm going to date myself here because I was in business with my family when the GST came in.
Mm-hmm.
That's essentially what happened then. The economy had a very, very bad recession in the early 90s because the GST came in, and it's like, this is a growing pain.
Yeah.
And at some point they may decide it, but that doesn't seem to be the direction they're taking.
Yeah. No, I mean, when you say date yourself, I always I like to read history, and some of the stuff isn't really history. This is not like too long ago, and you have a lot of people who are only working off of their experience in life, which is probably 2, 3 years, 5 years, when they really start understanding things. They don't know what happened like in the 80s when interest rates were like crazy high, right? And 90s, and when you went through so many other bubbles and all of that, how the economy works and shifts and all of that. And so that's why it's always important to kind of work with somebody who has the experience that you don't, so that they're covering something and they're not just kind of saying yes to what you're doing. Or what you want.
Well, even just in discussions with the fellows in my office here, it was interesting, and we talk about looking at past history. We're going to go way back on this one, and my one business partner said, you know what? When the Spanish flu hit, which was like 1917,
yep.
Right? It was right after World War I, right?
Mm-hmm.
So look at those two world events, pandemics. Right? And then major military conflict. So what do we have right now? We're coming out of a pandemic, and there's a major conflict in Europe.
Yeah.
And what happened at that time was hyperinflation right after coming out of those in the early 1920s.
Yeah.
And that moved into what we call the Roaring 20s. Now, that didn't end well in 1929, but very similar to what's going on right now. And you've heard terms of economists use terms like wall of money.
Mm-hmm.
So what this wall of money means is that through COVID, people didn't travel. People didn't do a lot of things because they were locked down. And they found their spending habits changed, where all of a sudden this money's been accumulating. Well, now they're out spending. And that spending causes inflation. And it's going to take time for that to work its way through and for things to settle. I personally don't think, I'm planning a renovation on my kitchen right now, and the discussion was, should we wait, a couple of years and see what the prices are going to do? And I don't think the prices are coming back down. Whether it's cars or construction. Unfortunately, once prices go up on items, it's very difficult for them to come back down.
Mm-hmm.
So, and that also rolls into the job market. The job market's very tight right now. Employers are competing for employees right now. We're seeing, more money being allocated towards salaries and what have you. So that's improving. So everything's moving up right now. I described this to a client of mine. I used to do home buyer workshops for many years. And we were having this conversation, and he thought the prices were going to drop. This is 15 years ago. And I explained to him this way. I said, look at this pen, and what are you paying for today? And will you be paying that same price in 5 years' time? And he said, no. I said, well, there's your answer.
Yeah.
Prices always go up.
Yeah. No. So,
so again, who knows what the future brings? But going back to the conversation where we were qualifying people at 5.25, we've already built in the safety net for people. Maybe it's time for consumers to adjust their spending habits a little bit on other items, and just be more careful out there.
Yep. No, thank you for your the conversation. I think we've gotten a lot of good information. If anybody wants to contact George, I'm going to be leaving his contact information below. Email him, give him a call, and see if he can help you out. Thank you for coming on the podcast, George.
My pleasure. Have a great day.
You too.
Take care.